It's an honor to have attend Shanghai Forum 2014, and I want to congratulate on winning the Nobel Prize last year. And what is your life? How has your life changed after winning the Nobel Prize?
Well, my advice is if you ever are offered it, don't turn it down. But it is stressful. There's it's maybe hasn't really started dying down yet, but there's just been a lot of requests for my time. It's been great fun, though.
Yeah. Thank you very much. And when I studied in the University of Chicago, the late Professor Miller received Nobel Prize at the time. And
that was joint with Modigliani, I think.
Yeah, exactly. And he was asked the same question from a student, MBA student, as far as I know, and his answer was really interesting. He said that he was telling the same stories to everyone, but the behavior or attitude of the audience has been changed.
I have repeated the same. People keep asking me, "What were you surprised on the morning? Or what happened?" I repeated that many times.
Many times, too many times.
Yes.
So, okay. And the next question is about the Mr. Fama and Hansen, and you wrote an interesting article in Project Syndicate, and name is Sharing Nobel Honors and Agreeing to Disagree. Yeah, that was a really great article, I think. And could you describe the major difference between yourself and especially Mr. Fama's view about economics?
Well, first of all, I should say I'm a big admirer of Eugene Fama. I've read many of his works, and I know that he's a thoughtful and careful researcher. I think also we went through this at the Nobel week, that we basically agree on the facts. There are these differences of interpretation, however. We agree that returns on asset prices, speculative asset prices, are somewhat forecastable. And the forecasts change somewhat from time to time. So we agree on that, and that's the statistical evidence. I think the difference comes from our likely interpretations of that. And I believe that I am much more likely to think of psychological or sociological explanations than he. And he wants to put a more favorable light on human rationality. But to me, the truth is going to be somewhere in the gray area between rational behavior and psychological behavior. So I don't think that it should be alarming to anyone that we disagree.
I see. Okay, so maybe it's a related question, and you are described as an innovator in incorporating psychology into economics. And would you like to share how you become involved in this field of research? It's a really creative kind of approach. And was there any opportunity or any?
Well, for me, it goes way back. I think as an undergraduate, I remember when I was just learning economics. It didn't sound completely right to me that people are not. It kept coming back to me. People aren't doing all those calculations. And then I got married to a psychologist, my wife Ginny, and that helped me develop a social network of psychologists. But on the other hand, I have to say, I am still an admirer of mathematical finance, and I think that there are different ways of looking at markets. None of them is strictly correct, and that's the reality. So we do benefit from traditional financial theory, as long as, in fact, I think behavioral finance is a savior of traditional mathematical finance theory, because it allows you to understand its limitations, and you can't apply a theory until you understand its limitations.
I see. Great. So it's sort of in a way complementary.
I believe so. Yeah.
Great. So human psychology and behavior affecting the markets, and how much do they affect the markets, do you think? I mean,
well, it's difficult to summarize that, but what I would say, and this is based on what I said in my Nobel lecture, that if you look at aggregate markets, like the stock market for a nation, that most of the fluctuations around the trend for that is just noise, and it's not information about anything real. But if you go down to the firm level, or you go down to more specialized securities, where there is something interesting and something that smart investors can focus on, then the movements in prices are more likely to represent some kind of reality.
So those two affect the markets in different ways, but all are in the same ways. And
in fact, my paper with Jiman Jung was called an evaluation of Samuelson's dictum. Paul Samuelson said that and I'm paraphrasing him, the aggregate stock market is unpredictable, but the individual stock, when you go down to the micro level, then there's something to be gained by trying to predict their prices.
I see. Great. Okay, now let's turn to the stock market in the U.S. and people say that there are some bubble in U.S. stock prices these days, and what do you think about the likelihood of a bubble in U.S. stock market these days?
Well, stock prices have gone up quite a bit since 2009. And they've reached a high level. I have my own price-earnings ratio called CAPE, or cyclically adjusted price earnings, which is just real price divided by a 10-year average of real earnings. My work with John Campbell at Harvard has shown that you can explain about a quarter of the variance of stock prices at the 10-year horizon based on that simple ratio. That's only a minority, but it's still a substantial minority of fluctuations. So, and that ratio now is quite high for the United States. It's around 25, which is not alarmingly high, but on the high side. It's not so high for Europe. It's below 20, I believe, for Europe. So that reflects just at the present moment, apparently somewhat greater optimism for U.S. stock prices than for European stock prices. That has something to do with the stories in the news about a sovereign debt crisis. Now that it's faded, but still Europe is more troubled. So I kind of think that investors should be cautious about investing in the United States, but not overly cautious, because I don't think that the ratio is so high that the market is unacceptable.
I see. Okay. Thank you very much. And my next question is about the Chinese housing markets. And these days people are worried about China and shadow banking and lots of increase in the housing prices. And if there is a housing bubble in China, you think it's possible, or what will happen after the Chinese housing bubble? What's your opinion about that?
Well, home prices have gotten very high in China, and in some places, they're more expensive than London or New York, I'm told. So that's a sign of some worry about the housing market. I guess there is some concern. But my general thought about China is that the period of rapid economic growth is probably not over.
Oh, not
and
over.
We could see perhaps a drop in the housing market and some problems with the Chinese economy. But I don't have any reason to think that it's going to be another enormous event like the world financial crisis that we've just been through since 2008. That was enormous and big. Not the kind of thing that you readily forecast. So I don't think that it's probably. I may change my mind about this.
Oh.
Now, but at this point, I'm thinking that the Chinese growth will likely continue. And now you mentioned the shadow banks. The shadow banks are a phenomenon in China that worries many people.
Right.
But on the other side of it is that shadow banks provide useful services that conventional banks may be slow to take advantage of. And so I don't think we should view shadow banks as evil. They're something that has to be appropriately regulated. So there are concerns about the Chinese economy, but my guess is that the concerns are more about something like a possible recession that will be self-limiting, and that if you look at the next decade or two, you'll see still phenomenal growth in the Chinese economy.
So you are generally optimistic about the growth of the Chinese economy? Huh?
Well, it's going through a modernization, and it's done it quite well so far. It has to slow down eventually because no country can keep growing at the rate China has grown. And some of the opportunities for growth that China had are being reduced. First of all, the one-child policy has produced a demographics that's going to involve a lot more elderly people coming up. They've had the advantage of the one-child policy that they had a high proportion of people in their peak earning years. Another thing is that China has seen a massive migration from the countryside to urban areas. And as that migration took place, it fostered tremendous economic growth. But it's slowing down, and it's another thing that's happening is the wages that are demanded by these migrants have gone way up. So it's a success. The migration is a success, but it's also largely ended an opportunity for rapid economic growth. But I don't think it's going to be horrible. I think it's going to be slower. And I think another thing, of course, is that China will be concerned more about the environment. I can hear people saying that they're concerned about air quality. And I think then as China matures and develops more of a concern about the environment, we'll again see slower growth.
Thank you very much. And my next question is about your idea, which is written. You have wrote an article in Project Syndicate. The name is the Global Economy's Tail Risk, and you reiterated that the significant impact of stories on the world's economy is fluctuation. And you said that you like stories.
Right.
Comprehensive, easily understood narrative of positive change, similar to Japan's Abenomics. So would you like to elaborate on your view about tales and stories and something like that? Yeah.
Well, there's a basis for our theory. I wrote a book with George Akerlof called Animal Spirits, and we emphasize stories. But what we're referring to is a psychological literature about the narrative basis for human thinking. That the human brain seems to be organized substantially around stories. First of all, a person's motivation tends to be built around perceived story of my life. Who
story.
am I? Where did I come from? Why am I doing what I'm doing? Marriages are built around a marriage of how we found each other and why we are appropriate for each other. And so are jobs. A person has a life story that connects into how I find meaning in my work. Stories can also be disrupted by panic stories or stories that... but generally, the human mind is very emotionally attached to stories about people and stories with which we call human interest. Now, the financial crisis was substantially related to certain stories. Prior to 2007, there were stories, for example, about real estate flippers or speculators who were making tremendous amounts of money in the real estate market. So it was a story of genius, and a story for anyone who hadn't been participating in regret that I should have participated. After the crisis, it changed to a different story. It changed to a story about bursting bubbles and a story about human foolishness and being caught up in the bubble. And so that story has led to a situation in which many of the world's economies are slow.
So you mean the story, because of the stories, it's contagion kind of things going on through stories.
I think we can get a lot of insights from medical epidemiology, and stories are like viruses. They spread from person to person, and when they start spreading, it's often a sign that something in the contagion rate has increased. So it's kind of hard for central banks to control this because it's not something that trying to control the economy is a little bit like trying to make a blockbuster movie. Somebody makes a movie and it's a big hit, and other people come along and say, I'm going to make a very similar movie and it will be a hit again, and then it isn't. There's a time when a movie can be a big success and a time when it won't be. And these are mysteries of human thinking that the same thing applies to economies. So there are times when people are ready to be carried away with investing.
So maybe because of the stories, people react to the stories and they change their behavior, and instead it can lead to a bubble or panic or something like that. So
Now see, there was a fundamental change in our stories before and after 2007. Before 2007, people didn't even believe that bubbles existed. Maybe they thought, well, there was one in 1929, but not now. We've gotten so much smarter, haven't we? But now, after 2007, the word bubble has just gotten so much more currency. And now it's mentioned by G20 countries in their statements and by prime ministers all over the world, whereas before they wouldn't, because there was a general sense that it was just not a reputable theory.
So, but you pointed out some kind of likelihood of a bubble theory before the crisis, right? So,
right.
Well, it means that you are a little different from others in accepting the stories of success or something like that.
Yeah, for me it goes back even further. Back in 1987, there was this huge drop in the world stock market. And I was wondering back then, why did it happen? So I did a questionnaire survey of investors asking them, well, why did you sell on that day? I didn't believe it was rational response to news. That was my inclination, and my inclination was to interview people, ask them what they were thinking on that day. that's not the typical view of a professional economist. Economists don't like to ask people anything.
Right. Right.
Well, traditionally they don't. They're getting it's coming up more. They like to build mathematical models of human behavior. And now I think that's great. I think it has its place. But understanding bubbles needs something else.
Oh, I see. So I remember the questionnaires, the result of the questionnaires
in 87.
After the 87.
Yeah, the thing that was particularly striking to me is that I asked people, what news story were you reacting to when you sold on that day? You know what it was? It was a news story about the market dropping. It wasn't anything else. Well, they didn't really mention consistently anything else except that, well, they had dropped a lot the previous week. So the week before the 1987, the big one day, October 19th.
Yeah, Black Monday.
Yeah, it was a Black Monday.
Yeah.
The week before, the market had dropped a lot. And over the weekend, people were stewing about it. That's what they told me. They didn't expect it to go that badly on Monday, but they were worrying about Monday. And when it started to drop, lots of people thought, I'm just going to get out. That's what they told me. And if I asked for another story, there was no consistency about any other story. That's it. Now, I have to say there was another factor back then, which was that something called portfolio insurance, that some institutional investors had made special arrangements to get out fast if the market would go down. So that was part of it. It was an interaction between that and a general psychological fear that developed suddenly in this down market.
So when I studied economics in the University of Chicago, I experienced those kind of things, even if I was not an investor at that time. But I didn't know that you were doing some kind of questionnaire things after the crash. But it's really an interesting story, and maybe that's a little related with your theories and your articles and maybe your studies and or research related.
Yeah, well, I think that it's hard to uncover the real reason for human behavior. People are not that good at explaining it, and there's so many things on their minds. But I think we have to use a number of different approaches to understanding human behavior. And one of them is just the simple questionnaire. You learn something. That doesn't mean you take their answers at face value, but you can find out what's on people's minds.
And also it is related with stories, not mathematics or something like that. What did you think, or what did you feel before the crisis or something like that? Then they answer in stories, not in numbers. I mean, they tell their stories.
Right. So in the 1980s, there was the beginnings of stories about the saving and loan crisis.
Right.
And that's for an example. So there were stories about corruption, nice stories about crooks. People love stories like that.
Right. Yeah. Okay, thank you very much. And the United States stock price one more time, and are you still investing in U.S. stock markets these days?
Yeah, I am. But I think, well, one problem right now is that alternative investments don't look that good as major investment groups either. So, for example, long-term bond yields tend to be very low. Short-term interest rates tend to be zero. Or very low. Real estate, that looks a little bit iffy too. So you have to put your money somewhere. So I think still having something in the stock market is still sensible, but not to be overexposed to it, not to have everything in that one market.
Any special industries or companies or?
Well, I've been working with Barclays Bank, and we actually have a investment product that we call CAPE, Right now, it's investing in healthcare, industrials, and energy. Also, technology.
Technology also. I see. So if Nobel laureates are investing his money into these fields, then is it affecting other people's behavior, do you think?
Well, I hope people don't just copy what I do. I think, you know, I have a great deal of respect for other approaches to investing. And so, on the other hand, most people shouldn't probably waste too much time trying to beat the markets, because it is a competitive game, and it's not something that you can succeed at without a great deal of effort.
In a way, it's a really a hard job to invest money into stock markets.
Yeah.
Sometimes you should wait, and you should.
Well, another thing I've been saying is that people need financial advisors, and most people don't really avail themselves of that possibility. So they, you know, most people wouldn't try to diagnose their own disease. I guess they do it on the web, but they still go to a doctor. And I think that financial advice ought to be like that too. People should have a financial advisor.
Sort of, in a way, independent view about those things which are.
But you need someone of integrity.
Integrity. I see. It's a doctor and patient or
right.
something. I see. So in a way, if you really believe or you keep your own view, then it may be detrimental to the investment. But if you get the idea of others or financial advisor, then it can be a balance.
Well, part of what a financial advisor does is tailor things to your particular needs. First of all, your age. That's very simple. Right. Whether you have children, and your tax bracket, and your personality, and they'll do things to remind you not to make big tax mistakes.
Great. Okay, let me go on to your book, which also very famous in Korea these days, Finance and the Good Society. And maybe you have heard about some stories which are going on in Korean financial industry these days, and there are lots of scandals and rumors and bad things happening in Korean financial industry these days. And the big thing was that maybe January or February this year, there was a big leak of information, the consumer information from a credit card corporation, and it also made people very worried about the Korean financial industry, and people, in a way, hate, I think, in a way, a little, hate financial industry, because the industry, the people in the industry are too greedy, and they just seek their own profit, and they don't care about financial consumers, and the public sentiment about financial industry in Korea is really bad these days. And maybe you are going to Korea next week, and many people will talk about the issue, I think. But in your book, you gave us some vision of good financial industry, which is fair and just, and maybe you have lots of things to tell us about the good society and the role of finance.
Well, finance is what people make it. You can be either ethical or unethical in finance. But I think it has the potential to be a noble profession, because, well, it produces economic growth, and it incentivizes people to work for some organization, and the spectacular economic success that we've seen in Korea has something to do with the financial institutions. I know there was another time when Korea went through trouble. That was in the Asian financial crisis in the 1990s.
Right.
And back then there was hostility expressed to the Korean financial establishment. But on the other hand, I think Koreans should be very proud of their successes. The thing is, as I emphasize in my book, Finance and the Good Society, the most important things that people do in their lives, almost all of them actually, are done as part of organizations, not as individuals, as organizations, and the organizations have a financial structure. It's the basic structure of our economy. And what a financial structure for an organization does is it clarifies what the incentives are for people who work there. It creates a long-term organization. People come and go. They change their mind about what they want to do. But when they're working for a certain company, they're working for its objectives. And the company can last hundreds of years. And it attains a value that would be lost if we didn't have proper financing. Well, I'm saying what may be obvious, but not everyone believes it. I also think that after financial crises, there's often a improvement of resolve to be ethical and high-minded. And I think we're seeing some of that now after this recent financial crisis. There is more talk about business purpose as a shared purpose. And, you know, not all finance is even for-profit. You have public finance, which is government finance, and you have non-profit finance. And now we're developing new forms, like the benefit corporation, which is halfway between for-profit and non-profit. So people are evolving in their way of thinking. But the real thing about finance, and I include in finance insurance, although that's often considered a separate industry, but finance and insurance are systematic technologies for promoting productive human activity and protecting people from the accidents that occur as a result. And so it is one reason people are angry with financiers is that they make a lot of money. Now, part of that may be unethical behavior. I'm sure a good part of it is some unethical behavior. But another part of it is the power of financial technology. It's very focused on making things happen. And so it seems to me no surprise that people in finance, at least the more successful among them, earn a lot of money. So the other thing is that I think what I tell my students who are going into finance is that I think it's important that you realize that if you do make a lot of money, you really can't spend it on yourself. You'll have to end up a philanthropist. And that should be understood, and it should be supported by society.
I agree with your idea, but still people just feel a little bad about the high salary or compensation of the financiers. And
part of that is what they call crony capitalism. And that means that when you're in a position of power in business, you find ways to abuse the power and take the money yourself. That's why we need regulators, and we need a public that is sometimes outraged by this behavior. So I'm not at all in favor of crony capitalism. It's a problem that society has to deal with.
So as far as I know, just before the crisis, the yearly compensation for the CEO of Citibank was $43 million, as far as I know, if I remember correctly. Then $43 million is a big money, and maybe that's one of the reasons why Occupy Wall Street siege was
going
on.
We're seeing rising inequality, especially in the United States, at the top 1% or the top 1/10 of 1%. And that is a concern. I think we should be talking about things to do about that. But it's not all bad, though, because some of these top CEOs have made a lot of money because they were great leaders. And some of them will just give it away. I'm thinking of Bill Gates or Warren Buffett. I don't think there's much hostility to them. Maybe some people feel hostile, but they built great companies, and now they're philanthropists. So that's something that young people can aspire to.
First, you should get lots of money, then you become a philanthropist. Then it's a good combination. Then.
Yeah. Now, I should warn any student who thinks that's a life objective that society won't love you for it, even so. But if it's something that is personally, young people often have a drive to make a mark on the world. They want to do something big and important.
Right.
And so I think going into business and then contemplating becoming a philanthropist, if you're successful, that is a reasonable, good thing to do.
I see. Great. Okay. Really great story. I really heard great stories from you. And my last question is about the topic of Shanghai Forum, economic globalization and the choice of Asia. Asia transforms and identifying new dynamics. And that's the long title of the Shanghai Forum's theme this year. And maybe you have lots of things to tell us about the themes.
My first thought about that is, what's the difference about Asia? It seemed, I don't mean to minimize, there's a different history and there's a different culture, but when you get to modern business, it's becoming more and more global. And it matters less and less what country you're from. Now we have communications which are instant, and I'm repeatedly in conference calls where no two people are from the same country, and so I don't know who's from where. So I think the problems of Asia are probably the same as everywhere else.
Wow. Okay. So to transfer, but maybe the emerging market. There are lots of emerging markets and developing countries, and. Right. In the Western world, there are sort of lots of countries which are already developed, and there are some differences in the developing stage of between two countries. And
well, we have a whole subfield within economics called development economics, which emphasizes how policy should focus on a developing world. And I have to say that it's been difficult for these researchers to come up with any very simple advice. So one book that I have assigned to my student by Danny Roderick, who's a professor at Harvard, it's called One Economics, Many Recipes. And I think that was the basic insight that he had, which I concur with, is that development economics is complicated. And the advice you give for each country depends on specific factors local to that country.
So also the final question is that the development stage of the financial industry is different from Western world and Eastern world. Right. Generally speaking, the level of development for the financial industry is higher, even if there are some crises. Still, the level of the development is higher in Western world, and in Asia, still a little lower than the level of in the viewpoint of level of development. So maybe advice to...
See, one thing we learn from development economists who've studied countries' growth is that it's a long, slow process of accumulation of institutions and barriers to obstacles like corruption that take place gradually. When a country is undeveloped, for example, it can't afford basic things that they can't afford regulators, they can't afford lawyers, they can't afford financial advisors.
Yeah.
So all of their efforts are going to just producing food or shelter. As they develop, they start educating the population. These are obvious things, but let me say them. This is what development economics is about. There's a process of development of both human capital and physical capital, and better societal institutions. That what has happened in a number of Asian countries since World War II is that they've been able to collapse the development process that occurred in Europe and the Americas for over several centuries into just a half century. And I think they gave a formula for success that's being copied around the world.
So the rural finance is very important in the Asian countries or the emerging markets, and but still there are some gaps between developed financial industries and emerging market financial industries. And maybe my last question is about your advice on the financial industries in the emerging markets like Korea or China, and financials in...
I don't think of Korea as emerging anymore. I think unless you're talking about North Korea.
North Korea.
They're not emerging so fast. One thing that's striking today, it's a little bit hard to classify countries because most countries in the world have an advanced sector where people are doing very well. So it's not so much emerging countries as emerging regions. Or there are regions that are left behind. As people migrate to the city, then the countryside is kind of... often the younger people, the more capable people, move to the cities. And the cities become prosperous. And the countryside is filled with elderly people or people who didn't have the talents that could find them a job in the city. So you have these regional disparities.
So can you give us some advice to the financiers in Korea or China? And
well,
yeah, that's my last question.
Yeah, Korea and China, they're both doing very well, I think. I don't know what... so I don't know what to say at this very broad level, except to say that there are a lot of people working in the area of development economics, and we have these many international institutions like the World Bank that impress me as doing a lot of good things. So we're on a good trajectory. I just hope that nothing disrupts it, that there's no major war or environmental catastrophe that could disrupt it. At this point, it's looking pretty good.
Great, yeah. So but maybe we can learn lots of things from your book and your articles and your talks about your tales, stories about financial industry, and especially the good society kind of narratives and great statements.
And my online courses, which are free.
Oh, really?
On the web.
Great, great to hear that. Maybe I should tell my students about that. Yeah, and maybe you lots of things to tell people about rural finance, and especially the public sentiment toward financial industry really bad in Korea. So maybe you can give some lessons to the public, and you can give lessons to the financial industry, and maybe you can give lessons to both of the sectors, and so you can make them a little more closer together.
Yeah.
Yeah.
Let me say though that this is the thing about life. Young people both want to do something important, and they want to be loved and admired. Unfortunately, those two don't go so well together. If you want to be loved and admired, maybe you should become a singer, all right, or an actress. But they're not really doing much useful. And then you have people who go into finance, and they build whole industries, and they provide jobs. But it's not new. It's not just Korea. People don't really thank them or admire. So when they make movies about famous people, they might pick a movie about a singer, right, or an actor. They will never make a movie about a financier, unless it's a movie about a crooked financier who went to jail.
Maybe, but maybe
it's just the way the culture thinks. It's not a way to become loved. But I think that if someone goes into the field with integrity and wants to do something important, this is one place to go.
I see. Okay. It's a great interview, and really thank you about giving us great lessons. Thank you very much.
My pleasure.
Thank you.